You don't really understand money until you watch it die. Most people think the dollar is immortal. It's not. It's a piece of paper backed by collective faith, and faith is a fragile thing. I've lived long enough to see what happens when that faith cracks. You don't hear gunfire, you don't see a mushroom cloud. You just wake up one morning and your savings buy you less than yesterday. That's how currencies collapse, slowly, quietly, and then all at once. When I was young, the dollar was as good as gold, literally. Now it's as good as political promises, which is to say, not very. The funny part, people keep treating the dollar like a god, even while the priests running it are minting new ones faster than a Las Vegas slot machine. Inflation isn't some mysterious economic monster. It's a tax invisible, dishonest, and brilliantly effective. It steals from savers and rewards the reckless. It punishes prudence and celebrates debt. You can work a lifetime, save every penny, and still watch your purchasing power evaporate because some bureaucrat in Washington decided stimulus sounded better than responsibility. I've always said the first rule of compounding is to never interrupt it unnecessarily. Well, inflation is the interruption. It's the silent partner in every bad monetary policy, clipping your wings while pretending to give you lift. So let's ask the rational question. If the dollar or any fiat currency starts to rot, what actually survives? Where does the intelligent investor hide when paper burns? It's not crypto. It's not the latest tech bubble wrapped in fancy jargon. It's certainly not the new financial system every 20 something thinks they've invented on Reddit. What survives is real value. Assets that have utility, scarcity, and endurance. Things that don't depend on the faith of central bankers or a fantasy of infinite growth. When a currency collapses, reality rushes back like a tide. People remember what matters. Food, energy, land, productivity, knowledge, nook paper promise. And here's the truth. You can't print real wealth. You can only create it, earn it, or own it. The dollar might weaken. It might even fail someday, though probably not as dramatically as the doomsayers predict. But the prudent investor plans for the improbable, not the impossible. If your wealth depends entirely on the stability of one currency, you don't have wealth, you have a bet. And betting against stupidity is one of the few wagers I've liked making in my lifetime. So let's talk about survival, not the kind that involves canned beans and underground bunkers, but financial survival. Because the best way to endure a dollar collapse is to own what thrives when trust in paper disappears. You don't need a PhD in economics to figure this out. You just need common sense, which, by the way, is rarer than gold. Over the next few parts, I'll walk through 5 assets that don't beg for faith. They earn it. Each one endures when paper burns and panic rises. But before we get to them, remember this. Money is a claim on value, not value itself. When the claim weakens, only the real thing remains. I learned that not from textbooks, but from watching governments inflate their way out of trouble for over 70 years. It always starts with temporary measures. It always ends with permanent consequences. Every empire that thought it could outsmart its own currency ended up learning the same lesson the hard way. The Romans diluted their silver coins until they were worthless. The Germans printed marks until they needed wheelbarrows. The Argentinians turned inflation into a national sport. And America? Well, we've gotten good at pretending debt is wealth. If you're counting on the Federal Reserve to protect your future, you're already in trouble. They'll save the system, not you. So, what should you own? What actually thrives when the dollar doesn't? Not what CNBC tells you. Not what your neighbor brags about at barbecues. I'm talking about assets that have survived wars, recessions, bubbles, and the collective stupidity of mankind. Assets that don't care about headlines, hashtags, or interest rate meetings. We'll start with the oldest one. The one kings, traders, and civilizations have trusted for thousands of years. Gold, not because it's magical, but because it doesn't lie. When confidence collapses, truth becomes priceless. And gold, my friends, is the most honest metal ever dug from the earth. I've heard people call gold a barbarous relic, usually from folks whose paycheck depends on printing more paper. Gold doesn't pay interest. It doesn't innovate. It doesn't promise growth. But that's exactly why it's honest. Gold doesn't need to explain itself. It just sits there, immutable, incorruptible, and utterly unimpressed by human stupidity. When governments overpromise and currencies decay, gold doesn't rise. Paper just falls toward it. I've lived through enough temporary crises to know that trust in the dollar can vanish faster than you think. 1971, Richard Nixon ended the gold standard, said it was just a short-term measure. Half a century later, that temporary move turned every central bank into a magician with a printing press. And people wonder why everything costs more. Gold is the counterweight to that delusion. It doesn't multiply like digital money, but it doesn't evaporate either. When politicians lose control of discipline, gold quietly rewards those who still have it. Let me be clear, I'm not a gold bug. I'm a realist. Gold isn't an investment in the same way a company or a business is. It's insurance, a way of saying I don't entirely trust the people steering this ship. And given the track record of governments, that's not paranoia. That's prudence. When I was young, 1 ounce of gold could buy a good man's suit. Decades later, it still can. That's what stability looks like, not the illusion of growth, but the absence of decay. Try saying the same about a dollar. The average investor dismisses gold because it doesn't generate cash flow. They forget, neither does peace of mind until you need it. The beauty of gold is that it doesn't care about your opinion. It doesn't default. It doesn't go bankrupt. It doesn't need a management team or a quarterly report. In an era of endless speculation, gold is the asset that refuses to play the game. It just sits there, quietly mocking every new financial fad. Every few years, some clever young analyst writes a paper explaining why gold is obsolete. And every few decades, reality proves him wrong. History doesn't repeat perfectly, but it rhymes, and every rhyme ends with gold shining while paper burns. Now, does that mean you should bury your savings in bullion and sit in a cave? Of course not. That's another form of stupidity panic disguised as wisdom. Gold should be part of your defense, not your religion. You don't need to worship it. You just need to respect it. If the dollar collapses, gold won't make you rich. It'll simply stop you from becoming poor. That's all insurance ever does. The funny thing about real safety is that it feels boring when it works. People ignore it because nothing dramatic happens until it does. That's why I call gold an asset of silence. That it doesn't brag, it just endures. And in a world where every government is competing to devalue its own currency, endurance is rare. You don't buy gold because you're scared of collapse. You buy it because you understand mathematics. You can't print infinite money without eventually debasing the unit. Every empire that forgot that ended up learning through humiliation. If you want to see the future of every paper currency, look at the past of every empire. Rome, Spain, Britain, all thought their money would last forever. All ended up debasing it. Gold doesn't care about your empire. It just waits for the next fool to learn the same old lesson. And the best investors, the ones who think in generations, not quarters, always keep some of it. Not because they fear chaos, but because they've seen it before. I don't know what the dollar will be worth 50 years from now, but I know gold will still be gold. You can't say that about much else in this world. Gold protects wealth, but productive assets create it. I've said it for decades, owning a good business is one of the few ways to defend yourself against the stupidity of politicians and central bankers. When you own a great business, you own human productivity. And unlike paper money, productivity doesn't collapse overnight. Now, not all businesses survive inflation or currency decline. Most don't, because most are built on sand debt, hype, or customer loyalty that vanishes the moment things get rough. But the exceptional ones, the truly durable enterprises, outlive the currency they're denominated in. Take Coca-Cola. It's survived wars, depressions, devaluations, and every flavor of human foolishness imaginable. Why? Because it sells something simple that the world actually wants, not a promise, not a token, but a real product with staying power. That's the difference between a fad and a fortress. A strong business has pricing power. It can pass inflation on to customers without losing them. That's how you stay rich. When the currency weakens, you own the pricing, not the pain. The average investor panics when inflation rises. The rational investor owns businesses that benefit from it. If the cost of goods rises, but your margins stay intact, you've effectively transferred the inflation problem to your customers. That's capitalism, cold, efficient, and completely fair if you built something of genuine value. Buffett and I learned early on that some businesses are so good, they're almost like perpetual motion machines. They keep spinning through recessions, inflation, deflation, you name it. When the dollar weakens, people still drink Coke. They still brush their teeth with Colgate. They still shave with Gillette. They still pay their insurance premiums and utility bills. The products don't vanish. The need doesn't vanish. Only the illusion of stability vanishes, and that's fine, because reality has always been the better teacher. So when people ask me, what's the safest hedge against a dollar collapse? I tell them, own something people can't live without. It's not glamorous advice, but it's the truth. The stock of a well-run, dividend-paying company with global demand is one of the best inflation shields in history, because behind every share is a real enterprise assets, workers, output. You can't print that out of thin air. Paper money burns, but productive capacity doesn't. Of course, this assumes you're not an idiot who overpays. Even the best business can become a bad investment if you buy it at a foolish price. There's a simple rule. If the price already reflects perfection, you're not investing, you're gambling on greater fools. And believe me, the world never runs out of greater fools. That's why patience is such an underrated asset. I'd rather wait 10 years for a wonderful business at a fair price than buy junk today out of boredom. The world worships activity. I worship rationality. If you understand how to value a business and can hold your emotions longer than the average man holds his breath, you'll do fine no matter what happens to the dollar. Because while everyone else is panicking about exchange rates, your business will be quietly doing what it's always done, producing, selling, compounding. A weak dollar actually helps some businesses. American exporters, for example, love it when their currency falls. Their goods become cheaper abroad, their profits rise. That's the irony. What feels like collapse to one man is opportunity to another. But you don't get that advantage by chasing hot stocks or listening to internet prophets. You get it by studying real companies, understanding cash flow, and knowing when not to act. Most people never learn that restraint is a form of power. They think wealth comes from motion. It actually comes from inertia, doing nothing when everyone else is panicking. So yes, own some gold if you must. But don't forget the real compounders, great businesses that thrive across regimes, currencies, and crises. They don't just survive inflation. They quietly make it irrelevant. And when the printing presses stop and the dust settles, the man who owns productivity will still be standing. Everyone else will be counting ashes. You can fake a lot of things in this world, but you can't fake land. When a currency collapses, real wealth retreats to what's tangible, not the things you think are valuable, things you can actually touch, use, or live on. That's why land, real estate, and other tangible assets have outlasted every empire, every inflation, every paper promise ever made. I've seen currencies lose 90% of their value, and yet farmland still feeds people. Apartments still shelter them. Factories still produce. Reality doesn't vanish just because the numbers on a piece of paper do. Most people misunderstand real estate, and they think it's about leverage, glamour, and flipping. It's not. It's about utility and endurance. A good piece of land, properly managed, doesn't just sit there. It works for you. It produces crops, rents, or even just peace of mind. Try saying that about your bank account. When the dollar starts shaking, of course, real estate isn't foolproof. Nothing is. A collapsing currency will drag property prices through the mud too, at least for a while. But the value, the underlying usefulness remains. And over time, value beats volatility. The key is to own assets that serve real human needs, not speculative fantasies. A farmland that grows food is far more reliable than a luxury condo that depends on rich foreigners. A warehouse filled with logistics demand is safer than a mansion filled with silence. I remember someone once telling me, "Charlie, they're not making any more land." I told him, "They're also not making any more common sense." And that's the problem. People confuse speculation with ownership. Buying land because it's going up is not the same as buying land because it's useful. If you can't explain why your property would matter, even in a crisis, you're not investing, you're daydreaming. Look at history. In the Great Depression, people lost fortunes in stocks and paper assets. But those who owned productive land or income-generating property often came out ahead. The value of a roof and a harvest doesn't depend on a stock ticker. And when inflation runs wild, debt becomes an ally if you used it wisely, because inflation erodes the real value of fixed debt. You get to pay it back in cheaper dollars, while your asset keeps rising in nominal terms. That's why the smartest investors never fear inflation outright, they position for it. But don't misunderstand me. Debt is a weapon, not a strategy. In the hands of fools, it's suicide. In the hands of the disciplined, it's leverage. When the US dollar weakens, tangible assets rise in price, not because they're more valuable, but because the measuring stick got shorter. That's what most people never grasp. They think they're richer when their house price doubles. No, your money just got smaller. Owning land isn't about chasing appreciation. It's about anchoring yourself to reality. I like tangible things because they don't lie. You can't talk your way into good soil or fertile water. It either produces or it doesn't. And when you find a real producer, whether it's land, timber, energy, or infrastructure, you hold it quietly for a long time. The world has an infinite appetite for illusion, but a limited supply of reality. That's why real assets hold value. They're the rare antidote to human delusion. Buffett and I never made our fortunes flipping land, but we understood its logic. If the system ever truly breaks, what do you think people will rush toward digital coins or farmland with a well? You can't eat blockchain. You can't live in a stock certificate, but you can live on land, grow food, rent shelter, and produce energy. And that's why land boring, old immovable land, remains one of the most powerful hedges against monetary insanity. The trick is to buy when it's unloved, manage it prudently, and ignore the noise. The land doesn't care about your opinion or your ego. It rewards stewardship, not speculation. When the dollar collapses, those who hold what's real will still have something to exchange. Those who don't will have stories. I've always preferred the former. If gold is honesty and land is reality, then energy is survival. When the dollar collapses, what do people still need? Power, fuel, food, transport. You can't run a society on hope and hashtags. Civilization runs on energy. Always has. Always will. And every form of progress, no matter how fancy, still burns something: oil, gas, coal, uranium, sunlight, or human time. The most valuable assets in a collapsing currency aren't digital tokens or metaverse plots. They're barrels, pipelines, and grids. The stuff that keeps lights on and machines humming. You can print more money. You can't print more oil. And that right there is the difference between fantasy and physics. During times of currency devaluation, commodities tend to rise not because they suddenly became more useful, but because the money used to measure them became more useless. That's the cruel arithmetic of inflation. Reality stays constant, but your paper shrinks. The energy sector, like most essential industries, doesn't need your belief to function. It just needs demand. And demand for power never disappears. It only shifts. When politicians talk about green transitions, I smile. Not because I oppose clean energy, but because I've seen too many utopian plans built on bad math. The world doesn't switch from fossil fuels to solar panels overnight. Every transition takes decades, trillions of dollars, and a lot of human error. Meanwhile, oil keeps the planes flying, gas heats the homes, and coal still powers entire nations pretending they've moved past it. That's the hypocrisy of progress. We curse the very thing that keeps us alive. Energy companies, the well-run ones, not the over-leveraged gamblers, tend to survive every storm. Because when money fails, people still pay their power bills. They still need heat in the winter, fuel for transport, fertilizer for crops. That's why commodities, oil, gas, copper, iron, lithium, are not speculative toys. They are civilization in physical form. You can have all the digital wealth in the world, but without energy, you can't grow food, move goods, or build anything. Try trading Bitcoin when the power goes out. Owning productive energy assets during a currency collapse is like owning oxygen in a room full of smokers. Scarcity meets necessity, and that combination always pays. Of course, energy investing isn't for amateurs. The sector attracts every kind of fool, the greedy, the overconfident, the political. They rush in when oil hits the headlines and vanish when it crashes. That's not investing, that's performance art. The rational investor buys energy when it's hated and holds when it's essential, which, newsflash, is always. In the 1970s, when inflation roared and currencies trembled, oil was the king of assets. Gold got the headlines, but energy made the fortunes. Those who owned the means of production didn't just survive, they thrived. Because when prices surge, energy companies don't just sell a product, they sell a necessity. And necessities don't go out of style. Now, I'm not saying everyone should run out and buy oil wells or copper mines. That's idiotic. But owning stakes in productive energy and commodity businesses, real ones, with cash flow and discipline, is a rational move for anyone who understands how fragile paper money can be. When a currency weakens, tangible resources become the new benchmark. You stop measuring value in dollars and start measuring it in barrels, tons, and kilowatt hours. It's not glamorous. It's not futuristic. It's just the backbone of civilization. If you want to protect your wealth, own a piece of that backbone. If you want to gamble, own the latest app that promises to revolutionize finance. One will keep the world running. The other will keep venture capitalists entertained. And when the music stops, the man who owns real energy will still be warm, fed, and solvent. Everyone else will be left in the dark, literally. I've said it before, and I'll say it again. Reality is the best hedge. Energy isn't the trend. It's the bloodstream of the planet. And when paper money faints, the flow of energy decides who gets to stand up again. When people talk about safe havens, they usually mean things they can buy. But the safest asset you'll ever own is the one nobody can steal, tax, or devalue your mind. Every collapse, every crisis, every panic, I've watched them all. And the people who come out on top aren't always the richest going in. They're the ones who know how to adapt. Skills outlast systems. A capable person can rebuild wealth 100 times over. A clueless one can lose it all in a single cycle. When the US dollar falls, so what? If you know how to create value to solve real problems, manage capital, build, repair, or trade, you'll always have leverage. I've seen engineers who became entrepreneurs when inflation wrecked salaries. farmers who turned barren land into gold mines of productivity, investors who survived not because they were lucky, but because they understood the game. Knowledge compounds faster than money, and it doesn't need the Federal Reserve's permission. Everyone wants to hedge their portfolio. Nobody wants to hedge their ignorance. That's why I've said repeatedly, spend less time predicting the economy and more time improving your competence. The future belongs to people who can think independently, not those parroting CNBC headlines. You can diversify assets, but not your brain. It's either working for you or against you. A lot of people think wealth protection means owning the right things. It actually means understanding the right things. In 1973, Buffett and I didn't just survive inflation, we made money. Not because we guessed right, but because we knew how to value businesses when everyone else was panicking. That's not luck. That's preparation meeting opportunity. When currencies collapse, information becomes priceless. People who can analyze balance sheets, understand trade, or make rational decisions under pressure suddenly become indispensable. You don't need a bunker of gold if you have a brain that prints solutions. Think of skills as your personal central bank. It issues dividends in every currency. It adjusts to inflation instantly, and it compounds without limit as long as you feed it curiosity instead of comfort. In every collapse, the market for competence skyrockets. The world suddenly realizes how rare it is, and it's usually too late to start learning then. Most people don't get that your education doesn't end with a degree that's just your entry ticket to the arena. Real learning happens when you start losing money, making mistakes, and paying attention. I've watched highly educated people go broke because they learned theory, not judgment. And I've seen high school dropouts build empires because they learned reality, not rhetoric. When you strip away the currency, the titles, the noise, all that remains is capability. A skilled welder, coder, farmer, or investor has real value anywhere on earth. A man who depends entirely on the stability of one economy has none. So yes, own gold, own land, own productive businesses, but above all, own your competence. It's the only inflation-proof, government-proof, collapse-proof asset there is. You can pass wealth to your children, but if you don't pass wisdom, you've given them a ticking bomb. And here's the cruel joke. Most people will spend their entire lives trying to double their income, while never once doubling their understanding. That's why, in a currency crisis, 90% panic and 10% adapt. The difference isn't luck. It's literacy, financial, emotional, and intellectual. The world can take your paper, your house, even your reputation, but it can't take the habits that built them. If you can think clearly when everyone else is losing their minds, you'll always land on your feet. That's not optimism. That's arithmetic, because in the end, survival isn't about having the most, it's about knowing the most. And that, my friends, is the ultimate safe haven. If you put all your eggs in one basket, you'd better watch that basket very closely. And if that basket happens to be the US dollar, well, I'd say you're sleeping next to a ticking clock. Every empire in history believed its currency would rule forever. Every one of them was wrong. That includes Rome, Spain, Britain, and yes, someday America too. The idea that the dollar is untouchable is the kind of arrogance that gets civilizations in trouble. It's strong now because people still believe in it. But belief, like youth, fades faster than you think. A smart investor never assumes permanence. He assumes entropy, that over time all systems decay. That's why diversification isn't just strategy. It's humility. You can't control what politicians print, what wars erupt, or what crises explode. But you can control where your assets sit when they do. Buffett and I always preferred simplicity. We didn't scatter money for the sake of it. But we understood concentration in the wrong place can kill you. That's why holding some exposure outside your home currency isn't speculation. It's survival. If the dollar falls, Assets denominated in stronger or more stable currencies rise in relative value. That's basic math, not genius. You don't need to be Nostradamus to hedge geography. I've watched intelligent investors build quiet positions in places with rule of law, resource strength, and fiscal sanity. You don't need a passport full of stamps, just one or two lifeboats that float when your main ship leaks. Might be Swiss francs, Singapore dollars, or even certain Asian markets where governments still understand that debt eventually bites. The exact choice isn't the point. The principle is, don't let one nation's mistakes ruin your entire future. Owning a little foreign currency, international equities, or even property abroad isn't unpatriotic. It's prudent. You're not betting against America, you're betting for yourself. And you'd be amazed how many people refuse to do that out of misplaced loyalty. They'll cling to a sinking ship because it flies their flag. I call that patriotic poverty. The goal isn't to escape your country, it's to escape overconfidence. If your entire net worth is tied to one currency, one government, and one tax system, you're not diversified. You're domesticated. Now, this doesn't mean scatter your capital across every map pin. Diversification only works if you understand what you own. Most people confuse diversification with collection. They buy random assets and call it strategy. It's not. It's chaos with paperwork. Real diversification means holding things that behave differently under stress. Some in hard assets, some in productive businesses, some abroad, some in cash, yes, even cash, the most hated of all, because liquidity buys you options when everyone else is frozen. The point isn't to chase yield everywhere. It's to survive anywhere. When currencies fall, governments tend to get desperate. They invent capital controls, punitive taxes, or sudden wealth contributions. Translation, they come for your money. And if every dollar you own sits within their reach, you're volunteering to be plundered. That's why I always tell young investors, learn the difference between being rich and being trapped. They often look the same, right up until the moment they don't. The rich man with flexibility can leave, adapt, and rebuild. The rich man tied to one flag can only beg. You don't need to be paranoid, just prepared. And preparation isn't about panic. It's about optionality. Optionality means when the world tilts, you still have footing. When one currency dies, another pays your bills. When one government fumbles, another protects your assets. It's not romantic. It's arithmetic. Remember, I'm not advocating running from your country. I'm advocating thinking beyond its borders because markets, like empires, don't respect them. The people who survive monetary resets aren't the loudest or the luckiest. They're the ones who quietly built bridges before the flood. When the U.S. dollar eventually weakens, whether next decade or next century, those bridges will matter more than any speech, slogan, or stimulus plan. And when others drown in nationalism and nostalgia, you'll simply step across the water and keep walking. Currencies don't destroy wealth. People do. Every financial disaster I've witnessed, from the Great Depression to the dot-com bubble to 2008, had one common factor: stupidity wearing confidence. The biggest threat during a dollar collapse won't be the collapse itself. It'll be how people react to it. When fear takes over, rationality leaves the room. You'll see the same circus every time: panic, speculation, denial, and finally desperation. Markets don't go insane, investors do. I've said for years, the first rule of compounding is to never interrupt it unnecessarily. Well, the second rule might be, don't lose your mind when everyone else does. Oh, because when a currency weakens, human behavior weakens faster. People start chasing illusion, miracle asset, quick fixes, secret systems. They call it hedging, but it's really just gambling in fancier clothes. I've seen this movie before. In the 1970s, inflation turned investors into adrenaline addicts. They jumped from gold to oil to junk bonds, convinced they were geniuses, until the music stopped. In 2008, it was leverage and real estate. In 2021, it was crypto and meme stocks. Same emotion, different costumes. The truth is, every crisis exposes the same flaw. People want certainty in an uncertain world. So they buy stories instead of assets. They confuse motion with progress and emotion with insight. It's human nature, but it's financial suicide. When panic spreads, your greatest asset is calm. When greed surges, your greatest asset is restraint. That's why temperament beats IQ every time. Smart people lose fortunes because they can't sit still. Disciplined people build them because they can. I've made more money by not reacting than by reacting quickly. Markets are like tempests. They reward those who can stay below deck while everyone else runs around screaming. The best investors learn to enjoy boredom. It's the sound of money compounding safely. When the dollar falls, you'll see wild predictions, hyperinflation, martial law, barter economies. Most of it will be nonsense. The real danger isn't apocalypse, it's impatience. People will sell productive assets for paper gains, abandon long-term positions for quick trades, and buy whatever some guru on YouTube tells them to. It's the same psychology that makes casinos rich. If you ever want to see human folly in its purest form, don't go to Las Vegas, open a trading app during a crisis. The crowd never learns. They think they'll be the first ones out the door when the fire starts. But in reality, the exits always clog. That's why I never worry about outsmarting the market. I focus on outlasting it. In every panic, I remind myself, this too shall pass. And when it does, who will still have cash, patience, and sanity? Those three are your real safe havens. Cash buys opportunity. Patience avoid rien. Sanity keeps you from joining the stampede. The dollar can collapse, and you'll still have choices if you've preserved your judgment. Lose that, and even gold won't save you. Because when you panic, you turn temporary volatility into permanent loss. People forget that markets are human mood swings in numerical form. And the one thing you can always count on humans to do is overreact. That's why discipline is worth more than any asset. It's the one currency that appreciates during every crisis. Buffett likes to say, be fearful when others are greedy, and greedy when others are fearful. I'd add one line, be rational when others are emotional, because emotion is what kills wealth faster than inflation ever could. If you stay calm, when others are desperate, they'll eventually sell their treasures cheap and you'll be the buyer. That's not cruelty. That's capitalism. The collapse of a currency tests more than your portfolio. It tests your character. Can you sit tight when the headlines scream disaster? Can you hold what's valuable and ignore what's loud? If you can, you'll come out richer, not just in money, but in wisdom. If you can't, you'll be another sad case study in behavioral finance. And history doesn't remember the panickers. It remembers the survivors. You can survive almost anything if you stay rational. That's the part nobody wants to hear, because it's not exciting. It's not glamorous. It's just true. In a collapsing system, the hardest skill isn't analysis. It's endurance. Not endurance in your body, endurance in your mind. Most investors crumble long before their portfolios do. They drown in anxiety, noise, and the daily drama of the markets. They forget that survival is a strategy, not an accident. The world teaches you to react. Discipline teaches you to wait. I've always said the big money is not in the buying or selling, but in the waiting. That line isn't poetry, it's physics. Compounding only works for those who can sit still while everyone else self-destructs. When currencies wobble and markets convulse, people start searching for new profits. They want someone, anyone, to tell them what's coming next. That's the first symptom of collective panic, the hunger for certainty. But certainty doesn't exist. Only probability does. The difference between a fool and a survivor is how they handle uncertainty. The fool tries to eliminate it. The survivor learns to live with it. You can't time the market. You can't outsmart chaos. But you can structure your life and your portfolio so